Ladies and gentlemen, Bitcoin has seen a strong 20% rally off of its lows, almost wiping its entire dump from the last few weeks. Is Bitcoin ready for new all-time highs, or is this another fake out where we see another potential reversal to the downside? In this video, we will discuss my organized and realistic Elliott Wave counts and price targets, so please pay attention as I try to explain everything and give my probabilities on the price action. Remember folks, please take everything with a grain of salt, as this video is merely opinions and for educational purposes only, and nothing is financial advice. So let's get started. From our last analysis, we discussed the potential reversal and having this current bottom as a C wave termination point or the end of a trend, and expected some kind of pivot at the very least. And this C wave pivot is based on the assumption that our larger wave 4 has concluded in the green, and now we may be working for a larger wave 5 of the higher degree as an extension that could bring us into targets of around $80,000 to $100,000 per Bitcoin. And if that is the case, we have to build on the bullish narrative and try to identify building the first 5-wave structure of that 5th wave that I mentioned. And remember, building upon a hierarchy of degrees is the key point for building the final 5th wave. And what that means, for those that are new to the Elliott Wave Theory, this can be a little bit confusing. So if we take a look at the structure of the very basic Elliott 5-wave pattern or impulse to the upside within a bull market, the circle is currently where we're sitting at on the map. And we're trying to identify whether this first 5-wave move of this red here is going to be building our first wave 1 of this larger 5-wave. So once that 5th or 5-wave moved in the red is created, we only have the first part of the puzzle, which is the wave 1 of this larger wave 5. So we still have a lot of hurdles to jump over on the micro time frames, but we do have a lot of evidence on the macro that is also showing us the possibility or the continuation to the upside. Now coming back right into the range, this range is up for a lot of discussion and subjectivity on how and where we can label our termination points, most notably our B wave of this wave 4. I don't want to sit here and discuss too much about it, but the overall gist is that we do have a pretty good possibility of a relatively good looking 3-wave move on to the downside that completes the wave 4 on the macro, like I have said. So we could say that it's a simple and normal zigzag wave pattern, or even a flat, depending on if you want to say that this B wave point retracing only 90% is enough for you to say it is a flat. I personally am on the fence and usually like to see B waves retrace 100% of wave A to be deemed as a flat to give it a more confident look, but it really doesn't matter. In fact, for normal flats, I think they're even actually more rare than expanded flats. That's just a personal opinion, because they have to work within the 100% ranges more or less with a small error of margin. So we can also say that this is also a WXY, but I have disregarded that idea entirely, because if you do zoom out, really if you do zoom out, it doesn't seem like it's a fitting as a WXY, because no Elliott Wave technician is really going to say and go out of their way and argue that this termination point here at the bottom is going to be the actual price extreme that is not against this previous bottom here. So you should ideally be looking at the macro and try to utilize this bottom here as a termination point, because when we do move out of this range will become less significant. And I would say that we can assume that this is going to be the termination point of a larger ABC or whatever you are looking at. And I've also discussed this in my previous videos as well. So speaking of the macro, remember, in order to complete a wave 4, we are looking for a 3-wave structure for these wave 4s and wave 2s, because since those are the only 2 corrective areas that we'll be looking for on the 5-wave structure that I mentioned, this wave 4 and wave 2 is where we're looking for corrective structures. And within that 3-wave structure, we typically want to be looking for how this wave 4 is going to be in relation for this wave 1-2 based on what is known as the alternation guideline or pattern, as I've discussed in the previous videos as well. So in the Elliott Wave Theory, very simply put, the alternation is a guideline, and it's used to predict the characteristics of corrective waves within the 5-wave cycle. And the principle of alternation basically suggests that the 2 corrective waves with waves 2 and 4 in a 5-wave impulse sequence will typically display different patterns and characteristics. Now remember, Elliott wave patterns have different types of corrective patterns, and in this case, we're looking for the alternation of these different types of patterns within these wave counts of waves 2 and 4. Now this could be a little bit confusing, but the gist of the alternation guideline is that if wave 2, for example, is sharp and a deep correction, for example, as a zigzag or some sort, then wave 4 is likely going to be sideways and a shallow correction, either as a flat or a triangle and vice versa. So if wave 2 is a sideways structure like we have here, we could assume that wave 4 is going to be sharp in nature. Remember, the depth is not what matters for alternation. I think that's a big confusion for a lot of people. It's not the depth that matters, it's the structural integrity of the correction pattern type. Remember, I mentioned that this move here of this wave 4 could be labeled either as a zigzag or even a flat. And in this case, we want to label as a zigzag if you really want to obey the pattern of alternation or the guideline of alternation. We did meet the overall idea of how the alternation works, meaning that as long as you have the zigzag concluded that takes into account for meeting the alternation guideline, it works in this case. So don't worry about the depth too much. That's more of a tendency, but rather focus on the psychological and market dynamics of what the alternation theory provides us, where market participants exhibit different behaviors at different stages of the trend. And in this case, the early wave 1-2 correction reflected that the markets were still uncertain about the new trend, whereas the later or current wave 4 correction, it's now showing a more established trend leading to a different corrective mode of pattern, and in this case could be that deep ABC that we're looking for. Now remember, deep is not termed in terms of the depth of how far it goes, because that is relied on how far or based on the actual ABC structure itself. The alternation guideline is just based on the different pattern of how it's going to be against this wave 1-2. So, and by recognizing that wave 2 and wave 4 should differ in form and complexity, the trader or you can better prepare for market movements and adjust your strategy accordingly, and it doesn't have to meet the requirements per se as well. It just enhances us for us as a trader to forecast the market behavior based on expectation between waves 2 and 4. So that is something that we have to take into consideration. We did meet the idea that if this is not a flat and treated as a normal ABC zigzag, this can meet the idea of that side or that sharp nature against this sideways move here. Now remember, I said it doesn't have to obey it, so I put here as well, or sideways. That could still be a sideways move here as well. Then the only sideways structure that could actually meet the potential alternation guideline is a possible triangle. That is the only structure that can be worked upon as an alternation, but you could still have two sideways structure that could complete an overall 5-wave structure. So just keep that in mind. It's just a tendency more than anything else. So let's zoom back in and talk about the overall integrity and the structure of how this ABC could be created. And this idea, the most important thing is not about this structure here. Like I have said, we can count 5 waves into this move here for this wave A and see this as a normal zigzag as well. We could see this as a 3-wave going into this and relying this as a possible flat. In that case, we're going to see this as the flat structure, but it really doesn't matter. Like I've said, what matters is how the C wave is being structured in itself of this overall ABC, because I have said that we have a potential bottom here. So how can we create that potential bottom? Well, that C wave has to be counted as 5 waves, because within C waves, since it's an actionary wave, we're looking for 5 waves to the downside to complete the overall correction. And in this case, we do have the possibility of a 5-wave correction being, or 5-wave impulse down to complete this overall C wave of this overall correction. And that is what we got. Now, the most important thing about this is that this wave 1-2 could also be alternatively changed within here. Like I've said here, wave B can be terminated at either at this point here or this point here, but it really doesn't matter. It just depends on the exchange that you are looking at. But since in this case of Coinbase, it should be over here. However, I'm kind of lazy and I didn't really change it. But this point here is where I would like to label the overall termination point, because like I've said, I like to keep it simple. And when you zoom out and you're taking into consideration of the other exchanges that created the high, the B wave point here seems a little bit more likely as the termination point. Doesn't matter again. But the most important thing, like I said, is how the C wave is created. It's not the best looking 5-wave, but there is evidence on how this 5-wave has concluded. And that is currently the bullish divergence that's being confirmed between waves 3 and 5. So if we look at this, Something that many people do not talk about or disregard is that if you have a bullish divergence being confirmed between waves 3 and 5, remember bullish divergence is only created when you are creating from the candle to the candle, from this body candle to this body candle. You can't do it from body to wick. You can't do wick to wick. You have to do it from body to body because that is where the actual termination point has happened for the opening and closing of the candle. So if we look at this, when you usually or typically will see is that you'll see a divergence between waves 3 and 5 that will conclude the overall zigzag or flat idea within a wave C. That will usually typically 80% more of the time you will see a complete reversal. At the very least, see some kind of bounce onto the upside if you see a bullish divergence. So in this case, we did get that 18 to 20% bounce to the upside, and that is what confirmed our bullish divergence, giving us a little bit more confidence that this could be the end of a trend and we can work upon a little bit more of the bullish narrative. So in this case, since we do have a divergence between waves 3 and 5, within this ABC, either as a flat or zigzag, it doesn't matter. What matters is that we do have a 5-wave move for the C wave, and that has completed as a possible price extremity where we have created a lower low on the price action, because that is what we need for a bullish divergence, and a higher low on the actual RSI oscillation. And when you have that with an extreme price drop and we see the oscillation not diving below the previous low of where we expect the RSI divergence to be created, is that there is strong demand within this region, and the markets have shown that right here. From our previous video, we also saw this as a possible leading diagonal, and it looks like the leading diagonal has ended pretty or concluded pretty soon. So it looks like if we zoom in a little bit further, we did have that ABC complete at the 50% mark here, where we have the ABC correction here. And then we're looking for another 5-wave move up into a possible wave 3 extension of the possible target for this 1.618. The 168% level is just based on the Fibonacci, trend-based Fibonacci extension of how a wave 3 target could be projected, because normal Fibonacci's cannot give us the projection. So we use what is known as a trend-based Fibonacci. We take it from the origin of wave 1 to the termination of wave 1 to the pivot of wave 2, where we have assumed it. And in this case, our least expectation is going to be the 1.618 level around the 66.9K to the 67K levels. And if it does go even further as an impulse for this wave 3, if it does go in parabolic nature, the 2.618 is another possible common target for a wave 3. But in this case, since we're trying to be conservative, we don't know the actual how this internal structure is going to be playing out. This is how we're going to be labeling this as the possible 1, 2, 3, 4, 5. Going into that first wave, as I mentioned, if we look in here where we're currently on the map that I showed earlier, is that we're looking for this 1, 2, 3, 4, 5. So we do have that first beginning possible 1, 2 created here as that leading diagonal that I've just shown you. So we're really, if we take into this consideration on the micro time frame, this is where we're currently sitting at right now. And now we're looking for this wave 3 to be continuing to the upside, 4 or 5 to complete the overall larger wave 1. So if we come back into here, this is now going to be creating the larger intermediate degree of that wave 1. We'll look for a pullback here, and then wave 3, 4, 5 should be creating for that first larger move to the upside of that final primary degree. We're looking for that wave 5. So that is how I see the current structure for the bullish narrative. I wouldn't want to see the price go below this level here, because that would not only invalidate this 1, 2, 3, 4, 5 to the downside and C wave termination. We're looking for an overall reversal from these levels, and this right now is going to be the beginning structure of what we're looking for, that 5-wave move to the upside for that primary wave 5 on the macro. So that's the first count. Now we do have a bearish count that I have also discussed previously, where we could be looking at a possible 1, 2 count, meaning that if this is the end of a trend, we're looking at this to be, actually, let's talk about the macro perspective on how a bullish or bearish perspective could be playing out, because it is important to talk about. Now, we did discuss this previously, very briefly, about the bearish possibility, and the only way that I can see this as a bearish possibility is seeing this as a larger 1, 2 flat idea, where we have completed this move to the upside as an ABC. So this is alternatively just fine, because remember, the hybrid waves of actionary waves and corrective waves either works as a 1, 2 for the wave A and B, or a wave C or 3 that could be completing either as the trend that is now looking like it's completed for the bearish idea, and we're looking for a 5-wave move of the overall move, this intermediate degree in this case, that we're looking for 5 waves to this complete this wave C of a larger cycle wave 2 that could bring us all the way down into the $10,000 region range. Now, it's quite too early to talk about, but I've said the only way that I can count this beginning structure is possibly going into a 1-2 as a leading diagonal idea. So if we zoom in a little bit again, we could see that this is working in 3-wave structures. So what that means is the only mode of correction that we could have is a possible 1, 2, 3, 4, 5 going into the first wave 1. Then we have the possibility of having this labeled as the 1 instead of the A wave that we had, and this would be the wave 2, and we're looking for a larger extended 3, 4, 5 to the downside, which is still pending. We don't know the exact targets, so we don't want to be too bold in talking about that. Remember, this now is working in the primary degree, so we got to work with the hierarchy of the degrees. So if that's the case of being a wave 1, 2, remember this wave 1, 2 is still structuralized the same as the internal count, where we have this as a WXY, and then we have this as the intermediate degree, and then we're looking for that whole impulse move that we talked about as the 1, 2, 3, 4, 5. Instead of going into a wave C, we're now working for a possible wave 1 of a larger extension of the primary degree in the circle wave 3. So if that's the case, we're now working in the intermediate degree, and we're looking for a wave 1, 2, 3, 4, 5 to complete that primary degree in the yellow. So we're going to be looking for this orange structure to be now completing for this wave 2. And again, that invalidation is technically above the origin of this wave 1 and the previous wave 2 that has been created from that first larger wave 1. But ideally, we want to be working as low as we can for this possibility, but anything further than the 0.618 is going to be worrying that this bearish idea is going to become less valid, although it can be valid up to this region here, but it's going to look very unlikely at this point. So in this case, I think that this could be leading us into a 1-2, and we'll have that possibility of breaking that low, going back into the previous area of interest in this region here to complete that intermediate wave 3. So if that's not the case, what other possibilities do we have? Now, this overall can look like another diagonal being created going into larger wave 1 or wave A, but again, it's still too early, ladies and gentlemen. This is the only way that I would count it for the current time of at the current time of recording for a bearish move to the downside. But other than that, that is how I'm going to be organizing my current counts, and the best way that I could see this is a possible continuation to the upside. This just looks like a 3-wave structure that, to me, ladies and gentlemen, on the macro, considering all the ideas that we've just discussed, this looks really bullish. That move off of the lows, an 18% move. We ideally want to see one more candle of at least on the weekly chart to be in the green. Then we could be really confident that the bullish continuation is going to be happening. So that is my overall counts, ladies and gentlemen. Hopefully that was helpful. If you haven't already, please do subscribe to the channel, because that does help the algorithms for these videos and motivate me to create more videos like this. And also, if you haven't joined my XForce Discord membership, please do not hesitate to contact me. The link is in the description below. If you're not following me on social media on X, at XForceGlobal, please do give me a follow there and come and say hi. I do a lot of my daily updates there on as well. Thank you very much. I'll see you guys in the next video with another surprising altcoin update. Thank you very much. I'll see you guys in the next video. Bye bye.